Afternoon, ladies and gentlemen, folks and folkaroos, traders and traderettes. This is Dr. Greg McLeod of Elite Traders University here in beautiful Las Vegas, Nevada. And it's so good to be with you here on this wonderful, super Friday. I hope you guys had a great week, a shortened holiday week, and it's weekend already. Some markets are still open. You can still, if you're a market junkie, you can still trade Bitcoin. And I'm going to put a link in the description to a broker that allows you to trade Bitcoin on the weekend if you want to look at that. But again, well, welcome you. This is a great time of the year, or this time of the week actually, to reflect back on our trades and to plan for the week ahead. You know what they say, that if you fail to plan, you plan to fail. So I'm going to, in the next 45 minutes or so, I'm going to go through what was catching my eye in the foreign currency market. Okay, we're also going to cover Bitcoin, and we'll cover some gold and some oil as well. So let's get started. I'm going to share my screen and let's get the ball rolling. Okay, and so very happy to see you here, and let me know in the description where you're from and what your favorite currency pair is, and that'll let me know more about you. And let me go ahead and we're going to share our screen. Sharing is caring, and let's get to it. And there we go. We're going to share some sound and make it we'll put the old risk disclaimer and all that good stuff on there too for you. All right. And I'm share. All right. And welcome to Elite Traders presentation of our weekly Forex forecast, bulls versus bears. Again, my name is Dr. Thomas Gregory McLeod here at the Elite Traders University, the best place to learn how to trade Forex and other markets using a proprietary pip and run system. Helps you to become a professional trader in 90 days or less. Okay. Let me direct your attention to the risk disclosure on your screen to make sure you understand all risks associated with foreign exchange trading. And I'm the founder and CEO of the Elite Traders University. I've spent 30 years of my life trading as a trading veteran, a trading mentor. I've traded options, futures, stocks, and crypto. Forex is my favorite. And I spent over 10 years working at the world's largest Forex broker dealer in the world, Forex Capital Markets. I'm a graduate from the University of California, Los Angeles, one of the top public schools in the United States. And I've worked 16 years as an instructor in public education. I'm a published author. I worked at prop trading desks, worked for Bank of America, and I've trained thousands of people worldwide in my pip and run Forex scalping system. I'm also the creator of the My Market Heat Map and the Trend Spotter system as well. So I am not some guy with ring light sitting in his mom's basement trading, but actually a seasoned veteran, a Wall Street insider who's here to help you make money as opposed to the Wall Street guys who are trying to take your money away. I'm on your side this time. So let's dive into what we're going to talk to today. So, before we get started, I want to direct your attention to something that we're going to roll out brand new, bringing the Elite Traders University to you. Leverage the power of the elite trading community. Time to go to school. Gain early access to the most proven Forex scalping system ever released to the public, along with exclusive bonuses reserved only for founding members of the Elite Traders University School Group. And so we're going to have exclusive mastermind sessions with me. We're going to have free membership to Earn While You Learn, and a whole bunch of other things, powerful community of elite traders as well. And so go ahead and you can either scan the QR code to join for free, or you can use the bit.ly Forex underscore scalping underscore club dash for you. Okay. So again, join us on school to continue the community and the power of the markets. Okay. And so let's get right to it. Let's go to our awesome. Hey, good guy, you doing? And so we're looking at we're going to start with the dollar index. The dollar index is the basket of currencies versus the US dollar. And we're going to be looking at that, because once we understand the US dollar index, we can actually are able to light. There we go. It's like we're looking at the dollar indexes of the basket of currencies versus the US dollars. And so we're looking for higher highs and higher lows to indicate an uptrend, which we have. We've had an uptrend since 2011, after the financial crisis, right? Higher highs and higher lows. But we also have a series of lower highs and lower lows. We're creating this huge triangle pattern in the US dollar index. Now, the Trump tariffs and other things have caused the dislocation in the markets, and you see the dollar selling off. So faith in the US dollar is waning because of all the indecisiveness going on. In fact, Wall Street has called the Trump tariffs the taco tariffs, because it's like, you give them and then you dump the filling out. So we see these things playing out in the market, and this is a big chess match. So sometimes what we think looks ridiculous and maybe looks maybe looks, like it's indecisive. It looks amateurish, but sometimes there's a method to the madness, right? No one's been here. That's since last year. So we have higher highs and higher lows in the market. And so we're looking for a bounce from the support area that we've had, a trend line since July 1st, 2021. And we see that price rally down, drop down to the 98.07 area. And we have an indecision, kind of a spinning top or doji, long-legged doji, which shows indecision in the markets, right? And so after this big, strong move to the south side, we're looking for a rebound here. And the result that we had, basically, we had if you drop down to a weekly chart and actually drop down to a daily chart, we can see that we got this run up because the courts had had basically said that the Trump tariffs were illegal and were unconstitutional. But then later on the next day, so we got a rally in the stock market, a drop in the dollar, and then but then the next day, it's the judicial system that's doing the taco, right? They basically overruled the previous decision, and we basically saw a rally in the U.S. Dollar, as people have basically given up trying to bet on no tariffs, right? Tariffs, the markets don't like tariffs. The markets at large, global markets, don't like tariffs, and so if they don't get the tariffs, well, then guess what? The dollar sinks, currencies rally, other currencies versus the US dollar rally, and then you also have a movement up in the other currencies, right? So when the dollar gets stronger, it means that people are running for safety and running away from the market. They're running away from risk, and they're running away from the market. They are running for safety and they're doing some other things, right? So it's very important for the market to have a stability. And so basically, we're seeing a risk on when we have tariffs put aside, and a risk off when we have tariffs coming back, right? So tariffs are coming back is a bad thing for the market, and we see people buying the dollar, buying bonds, and looking for safety, a flight to safety. We'll also see the Swiss franc rally. We'll see gold rally and some other things, right? Because of this fear trade. So let's go ahead. We're looking at the US dollar. We're seeing lower highs and lower lows. We're seeing a little bit of a rebound, right? And we're seeing a little bit of a pop in the dollar right here, this doji. So let's drop down to the 4-hour chart. And we can see the big gap up when the court basically said that the tariffs were off and the tariffs were on, right? We have this pullback, but now we have a higher low, right? So it looks like the tariffs are going to be here to stay. Trump has called for the Supreme Court to basically intervene and to overturn the lower court's decision to stop the tariffs. So this higher low indicates that we should see a higher move in the US dollar. And if we understand where the US dollar is going, we're going to know where the other currency pairs are going to go. And it's going to be a little bit easier to trade, right? So basically, bulls versus bears, we are looking for the dollar to continue to rally going into the rest of and going into June, right? And so the bears will probably not take over, and the bulls we're dollar bullish here. Right. And so we were looking at buying the US dollar. Okay. But let's go ahead and take a look at the anti-dollar, which is the euro. The euro is a group of countries that have come together with a single currency unit. The euro dollar is again considered the anti-dollar. And let's go ahead and go to our 50,000 foot view, looking at our monthly, and we can see that in our monthly view, we have had a uprise, and then we had this downtrend channel that we're in, and we're at the top of that channel, right? And just try to say downtrend channel 5 times fast, downtrend channel, downtrend channel, downtrend channel. It doesn't work out, right? You get tongue-tied. But this is what we're gonna do. We're gonna clone this like a sheep, clone this line, and then now we're gonna create this. I'm using trading view for those people who are watching. This is a trading view. And here is our rally to this support area or resistance area, supply line. And so you can see the opposite, very opposite that happened with the US dollar, where we hit a bottom and we had that spinning top. Now we have this was a full body bullish green candle. And look at the rejection off of the trend line. And then we have this small body doji. And this could be one half of a bearish candlestick pattern called an evening star pattern. And the evening star pattern has a bullish rise, a small body spinning top, and then the next candle would be a red bearish candle pointing down, retracing the body of the green candle, right? So we look something like this. I'll go ahead and draw it. Again, this is for illustration purposes. It's not what, anything can happen. But we can use candlestick patterns to predict the market. We will look at for something like this as a red body candle, very close like that, a reversal candlestick pattern, right? And we could see actually maybe coming back and retesting these lows, 95.24. So the euro on the monthly chart looks like it's topping out. It was surging up pretty good. Got kind of tuckered out, and wants to sit a spell, and we can see we have a low, we have a rally, we have a lower low. And if we get we have a lower high, I'm sorry, high, lower high, a lower low, lower high. And if we break below 1.1063, that would give us a structure change in the market, right? We go from bullish to bearish, and we would see the euro be the anti-dollar. Okay. I think we just probably scored something on something. I just heard something just chirp and chime, right? So let me go ahead and draw that out. Okay, it was probably under, they moved the arrow key. There is the arrow. So I'm looking at a downward move coming back down even lower, right? So bulls versus bears on the euro. I am bearish the euro.
Sell.
Looks like a guy that's like getting ready to jump off the top of one of those, divers that dives off of the top of a cliff, those cliff divers. It's like a cliff diver. He's like poised right there. Don't do it. Don't kill yourself. Don't jump. And he jumps and he falls, and we want to bet on him falling out of bed here, the euro that is. That's a weekly euro. We can drop down to a daily, and we can see that we are, if we can break the trend line, a rising trend line, our demand line is here. And if we can break that trend line, we would see a drop, precipitous drop. We also have a bearish head and shoulders pattern forming. And if you're a market technician and you follow head and shoulders, here's a shoulder, left shoulder, followed by a head, and then followed by a right shoulder forming, right? And the top of that shoulder comes at one spot, 1433. But you can complete the shoulder and create a neckline at right here. Right, we're right on that trend line. And so we break that, we could see a precipitous drop, right? So we can see a pretty good risk to reward actually for the short as well. Again, we are short-term scalpers. We probably wouldn't take a trade like this. We would drop down to even smaller time frames, like a 15-second, 1 minute, 3 minute, 5 minute. And if you want to find out more about that, well, then go ahead, email me at greg@elitetradersreview.com. I'll be more than happy to tell you about how pip and run actually works, right? So bulls versus bears, we're bearish. Let's go ahead and move on to, let's go across the pond and go to the pound, dollar, or cable. And so we're going to start with our monthly chart too. And this is kind of interesting because we have had probably a bearish or bullish inverted head and shoulders where we had a low close to the 1.0358 area. And so now we see so that's a funky one there, right? I'm going to, okay. Let me move that. The head will be the wick. And actually this is like a Quasimodo kind of like, right? Kind of like we're gonna move that over there, move this over here, right? So we've got this kind of weird head and shoulders pattern, right? So, we basically had our pullback, our ABC, and we haven't broken the neckline. I mean, barely broke it, but usually in the case of the pound, or in the case of the you have this inverted head and shoulders, you usually have a target equal to the height of the neck from the top of the head or the bottom of the head to the neckline. We usually have a measurement objective, right? And we would see some type of a breakout. So maybe the pound breaks, closes, and stays bullish, and this would be bearish for euro pound. So maybe the pound breaks the trend. Remember, the UK economy, the UK is the first government to do a trade deal with the United States. So doing that trade deal may be very beneficial to their economy. And so that'd be very beneficial for their currency, right? So we might see a rise in the British pound to the 1.4978 area over time. As long as we stay above this neckline, we can at least get to 1.4244, which is the high that we found on May 24th, 2021. And so if we can get that'll be a good possible long target if you're holding position or swing trading, which all I need is to move above to this old high, and I'm going to be scalping in and out of that. But bulls versus bears, unlike I think the pound may buck the trend because they have a deal with the United States for trade, which could be beneficial for their economy. So bulls versus bear, I am bullish. Bye. I'm bullish the British pound, right? And okay, so let's move on. Let's keep it moving, keep it spicy. Aussie dollar. Here's our Aussie dollar, and it looks like we took a trade on it earlier, and I think we got paid. Let me go ahead and actually put on our positions and our executions. Yeah. So we did. We did actually make some money on that trade, and so let me just go ahead and pull that up. We got short. We were short here at the 64.41. And, it just moved sideways for a long while. We got a fake break to the north side, right? Finally, we got a fake bullish, a bull trap. Our prognosis was still short. And so we continued to hold that short. And we were rewarded. We were rewarded finally. It took a while for it to materialize, right? And I'll go ahead and show it to you. Let me go ahead and bring that up here. And you can see that, we picked up $970 on that position. It just closed. It's 441 and it closed at 434. So it closed about 7 minutes ago. We closed it for $970. But it took a really long time. It wasn't pip and run. It was like pip and crawl, but those are the kinds of trades that we do. And if you sign up for our school group, you can learn more about how we do it and how you can apply that into your trading, okay? All right, so let's zoom out. We're down into micro world on a 1 minute chart. Many people are afraid of trading the small charts. In fact, short-term scalping is one of the most cognitively demanding forms of trading. And so, you shouldn't just try this because, hey, I want to get out fast. You probably need a system. Remember, if you fail to plan, you plan to fail. So let's go back out to let me go back to our settings, remove all of our executions. We took a lot of executions over time in our various groups. Monthly chart, interesting. We have this almost a triple bottom on the Australian dollar, right? And then we have a low that we reached in 2020. That's the pandemic low. We hit 0.5520. And so we're about 1,400 pips or 900 pips off of the low from the pandemic low. And then we tried to pull back, or the Aussie dollar tried to make a low at the 0.5909 area. And we've got strong demand that came in. And so we have higher lows, which is if we connect the lows, we have a rising trend, right? So that is usually bullish, but we also have a supply line. We have a supply line that really goes all the way back to 2010, right? And it just, we draw that, it's gonna be a little sloppy because some of it is not perfect, right? So we've got this triangle of indecision where, hey, will we be able to, we might probably challenge this area here, this 6627 area. I'm on a monthly chart, but we do have lower highs and lower lows in a downtrend. We do have a lower low than the previous low, even though it was a spike, and we have stopped here, so we could actually move down. Let's go to a weekly chart, and you can see that it is petering out. We've got a Harami, pattern there, and we have lower highs there, kind of like a bearish megaphone pattern. There's 48,000 chart patterns. We actually focus on about 4 of them for pip and run, but occasionally you'll see a pattern that might actually line up with technical analysis for predicting price direction. And usually when price is expanding, this megaphone type of pattern, it's usually a bearish pattern. And so we could see, if we see a break below, say we break below 63.58, we're currently trading at 64.33. So we break that, we can retrace all of this really liquid kind of movement we had back in April, and we could come back down and retest the lows back in 59.08 area, especially if the dollar continues to rise. This could be a very serious transition. Again, I would be wrong, or I would change my bearish prognosis if we see a break above 65.37. There's a 50-cent word for you, prognosis. I'm the doctor, right? So I got to write a prescription on this thing. And I basically, based on what I'm seeing, I'm looking for the bears to remain in control or get back in control, especially as the tariffs continue to be to be a thing, right? Now, if we see some deals coming from other countries, now I'm thinking they're going to stall those deals out to like September or October. And once we get deals coming from other countries doing tariff deals with the United States, we'll get that big Christmas Santa Claus rally. And but they probably wanted to slow roll. Typically around this time, selling may go away. The market is weak anyway, so why would you want to shoot your best shot or your best market moving information? Why would you release it during a very negative, seasonally negative? I mean, if you go back 70 years, markets have been negative in May, in June. You get like maybe a little pop in July. And then August is like a horrible month. September is worse. Then October is when we always have like disasters, Black Friday, Black Tuesday. I don't know why it's got black in it, They got something against black people, What's up, So you got all kinds of things that go in October. The first week of October is typically bearish. The crash of 87 happened October 4th, the day my twins are born. They weren't born then, it was 1987. But October is pretty bad for the markets. But that November is money. And I predict that we will have tariff deals galore coming out. In fact, the deals are probably already done. They just don't want to say. Don't say anything till late October, new fiscal year for the United States, October 31st. They start their fiscal year, Halloween. Don't get me started on the occult that's based in the markets, okay? The markets are based in the occult. And then you have October 31st, you have Halloween. They sell in May and go away, come back Halloween, rally from November until April, and start this whole cycle again. It's a big chess match, so don't get your panties in a bind over what they're talking about in the fake news, right? Because seasonally, the markets are weak during this time, and so the best time where the big guys, get their Christmas bonuses, the end of the year bonuses, are the fourth quarter. They're going to save their best news for the fourth quarter. So I wouldn't see here any, we probably have deals with China. We probably have deals with everybody. And they said, that's why they keep, well, where are the deals coming? Where are the deals coming? They're not going to tell you about the deals in May or June. They're going to save them for October, November, Christmas present. And we'll see, maybe S&P 6,000, 67,000, and maybe like 22,000, 23,000 on the NASDAQ, all kinds of crazy stuff. You can imagine the markets going crazy to have these tariff deals, big tariff deals coming at a time in the market that's seasonally positive. I mean, this is like, you can't write a better script than this, right? So keep your powder dry. Don't, they can talk about the tariffs, but this is all, everybody's trying to get paid, and November is when everybody's going to get paid. So just, and you mark my word, I say this, hey, I want people in the chat box going, Greg, you said it, right? Well, I've been watching for 30 years. It's always the same, right? All right. Anyway, let's do this. Okay, so we have Australian dollar. I showed you how we made money on Australian dollar right on this broadcast, which was great. We're going to go to the next currency pair. So bulls versus bears. I am bearish the Australian dollar.
Sell, sell, sell.
Yeah, it's yeah. I like this. In fact, I'm writing this down. And sometimes I film this stuff. I'm like, I'm done. And then I go, wow, this is exactly like I said, right? So I surprised myself after 30 years. Let's go to the next thing. Dollar CAD. The dollar CAD looks pretty weak, I see King Charles has gone over to Canada to reassure the sovereignty of Canada that they should be a country and not a state of the United States. And, anyway, I talked to people on the ground in Canada, and and the economy is not looking that great, especially with the U.S. doing their thing. And but Canadians are hitting back. I live in Vegas, and a lot of our visitors from into Vegas are from Canada, and so You know, the casinos are empty, and the restaurants are a little bit light as you know, this time of the year, and there's a lot of Canadians not showing up. So can we just like do like Rodney King said, look, can we all just get along? I think we will get along. You know, after look after November, all the deals are done. Everybody's gonna be kumbaya. It's like, you wonder what would happen here. But dollar CAD, looking at this monthly chart, you have this triple top, which looks pretty ominous, right? We also, but triple tops are like I call them unicorns. They don't exist, only in children's books and cartoons. Triple top. I mean, if I see a triple top, I'm thinking 3, 4, 5, ABC. This thing breaks north. We get above 47.10. This thing blows out to 106.09 or so, right? So even though this looks incredibly bearish, but I'm looking at the wave count, I think we have completed our down move, right? And I think as the dollar continues strengthening, I think it really, really strengthens against the Canadian dollar, right? And we can see we've been rallying since July 2021. As if we just have this correction, a three-wave correction against the trend, an ABC, right? When we finish this ABC, we're at the bottom of C. This is a really good entry for a 5-to-1, 6-to-1 entry for a trade, right? I mean, you got to have a little bit, maybe have a little bit of a wide stop there. We're looking at possibly a 6-to-1 look to go back to the old high. We're looking maybe for like a 6.64 to 1 risk to reward ratio, right? And you'll earn positive carry because the US dollar has a higher interest rate. So you got a carry trade, get paid to hold on to it. Dollar CAD, I'm bullish dollar, I'm bullish the United States. There we go. Yeah, so I would look at that. That's a weekly chart. Dropping it down to a daily, you're gonna get a lot of turbulence, right? You actually want to see some confirmation, not just jumping in, because it'll shake you out. They're not gonna let you catch the absolute bottom yet. We do have 5 ways to find. We have a higher low. We like to see price break the trend line, get above. We can get above 1.3836. That would be our sign that we would go higher. There's big gaps that have to be filled. Gaps filled from we're currently trading at 1.3738. We have gaps all the way up to 1.4266. That's like 500 pips. 500 pips, guys, right? So we've just finished this massive ABC. ABC you later, right? So yeah. So looking for that. Let's go to dollar Swiss. Dollar Swiss, ever since the Swiss debacle back in 2011, where the Swiss National Bank depegged the Swiss franc to the euro, and without telling anybody, so people, global banks and traders are still kind of mad at the Swiss franc, and so you don't get as much talk about it. But I just covered because it's a major currency pair, and once in a while, I mean, this is a huge, huge drop, just drop down, and then it was like in a day, right? I think it was here, right? This is a one day or 1 month move. I'm going to move out to a daily chart. We can see how big this move was. That it messed up a lot of people. Messed up a lot of brokerages. A lot of brokerages went bankrupt on this move. Right, we're at 1.01. We had analysts were totally long and wrong Euro Swiss, thinking it was going to go higher, and we basically dropped from 102.07 on dollar Swiss all the way down to 83.04, like a 2,000 pip move in 1 day. And spreads blown out of the water, and countries mad. It was that was a very, very, very bad day for a lot of people. So ever since then, you can see that dollar Swiss hasn't really, in fact, some brokerages have raised margins and spreads on dollar Swiss and treat it like almost like an exotic currency, because it's unpredictable, and many businesses went out of business. They were no longer in business, all the Swiss are neutral. Yeah, Swiss will jack you up. So here you go. And look at this. These are big, thick moves here, right? You drop it from 80 because really there's no buyers. I mean, once this thing started dropping, people just I don't want to touch it. I'm getting PTSD from 2011. Yeah, I'm out. Mom, wake up, honey, wake me up, honey, wake up. It's just a dream, a nightmare. I dreamed I was in dollar Swiss in 2011. You are. You had a pending order that went off without you knowing about it. And that sucked. You guys ever had that happen? Let me know in the chat box. Ever had that happen to you? You see a mysterious order, and then you contact the brokerage, and it turns out you had a pending order on your platform from like 2 years ago because you had GTC, good till cancel. That's what GTC stands for, good till cancel. And you never canceled it, right? That's why these day orders are really cool, because a day order has your order in there for a day, and then after a day it expires, right? So anyway, we're dollar Swiss. We have some higher lows, but that wick rejection, nah. Now, dollar Swiss and dollar yen don't particularly play the dollar story very well. They kind of do their own thing. And why? Because they have very low interest rates. The Swiss National Bank has negative interest rate for a while. In fact, we can go to my market heat map and arrangement of currency pairs by percentage change. It's my market scanners, my Swiss Army knife, all-purpose tool, and we can actually check on what the interest rates are for. It's more than just a heat map. We can go to our central bank interest rates here under Trader Tools, and we actually can see what the interest rates are for the various currencies. Since interest rates are the biggest drivers of currency movement, and we can check Switzerland, we can see that 0.25%. So their interest rates never ever went up. So they're just really trying to keep people from getting into their currency. If you're going to get into it, you are actually be penalized if you are. And they actually cut March 19th. They cut 25 basis points. So at one time they were negative. They were negative for a long time. So actually Japan's interest rates are higher than Switzerland. So if you're long Swiss against the dollar or against the euro, you're going to be paying through your nose in interest holding that baby, right? So they really don't want you to be in their currency. And with this on the daily chart, I'm seeing a downtrend, lower swing highs, lower swing lows. However, we have a higher low right here, right? This little higher low. We are unable to break the old low that we had back on April 21st, 2025 at 0.8026. We did break that low. And so you gotta, if you're a bear, you're bear, you're scared. You're a Care Bear, I go like Scare Bear. You get short here, this thing blows to the top side, you're nuked, right? You're effed. So and that's the technical term, right? You are looking at this pullback here, and we've seen a multiple bottom. I mean, we could blow out and get back to the 86.61. That's 400 pips away, right? And so we have fake breakout above the trend line, right? Prices snap back, but we're unable to make a low. So the bears could not capitalize on that wick, right? So that Pinocchio bar here on May 29th may come back into play. So don't look at it too bearishly. In fact, and I'm looking at the negative carry. I mean, not negative carry, but it's the interest rate is going to be negative, and people are going to be negative trying to hold this thing down. And so we might see buyers step in and get basically sell. They'll earn interest by being long the dollar, short Swiss, or being long Aussie, short Swiss, and we could see this move higher. So bulls versus bears. Cautiously bullish the dollar Swiss. Very cautious, right? I would like to see a break of that wick at 83.47. That, and then if we could see that, then we could see a smooth sail. We got some gaps to fill at 87.98. So that's like 500 pips away. So I think once we get into it, this could be a good trade that if you held it, you'll get paid interest. I just, the Swiss National Bank, I got PTSD. And I didn't even trade it. I didn't lose money. I was trading long euro during that time. And I remember when the phone calls are coming in, Greg, what are you doing? I'm at another broker. I was trading on C-Trader. C-Trader didn't freeze up. Spread stayed tight. And I was in the euro. And I was going long, which is the opposite of was going the opposite of the dollar Swiss from the euro Swiss. Okay. Let's moving right along, keeping it spicy and moving on up. Look at the other side of the world. I think we did Aussie already. We did dollar CAD, dollar Swiss, dollar yen. That's the one. That's you always like fun and surprises with dollar yen. Dollar, you make so much money in yen. You want to name your kid yen, and then it could hand your head to you, like chop your head off. Ouch, because you've gotten too comfortable with it, right? And so we have an uptrend, been uptrending since 2021, higher highs and higher lows. Japan is in a tough spot. They need an export-driven economy, right? But then they got to pay tariffs now. And then inflation, a weak currency, sure encourages. It's a way of manipulating the export picture, where they can sell their goods cheaper in the United States by keeping your currency low. But their citizens are using a weaker currency to buy products like oil and raw materials are priced in dollars. And if you're weakening your currency, you have high inflation, right? So if you go on vacation, one of the biggest vacation spots now are people going to Japan. Why? Because you can take a strong US dollar or a strong euro, you go in there, you can clean up, you can buy all kinds of clothes, electronics, and food. You can have a great vacation in Japan with your native currency if you have a currency that is high valued, but if you're in Japan, guess what? You're not traveling to the United States because, hey, your yen doesn't buy a whole lot. So let's translate this into an actual trade idea of dollar yen on the 1 month chart. We see pullbacks to a level of support, and we have buyers stepping in. You can tell we have dojis, bullish dojis here, where the big bearish selling, are getting long yen. Getting long yen is like, they only pay 0.5% interest, which is like the highest they've paid out in like 30 years. But we're hitting the support area at the 40.64 area. We can see a rebound from there. We can see maybe this looks like a morning star, half of morning star pattern. A morning star pattern is a bullish chart pattern, and we have half of it, right? We don't have the full piece of it. Now, trading, a lot of people want to wait till they see the pattern form before they want to assume, because they want to make an ass out of themselves, right? However, I look at it like, look, if I got half of it, all I need is a break above the high of the previous candle. If I see 44.12 on my chart, I'm pulling the trigger on it long and looking for a move back up to 61.97, which was the high that we had back on July 1st, 2024, before we had the big talk of the Bank of Japan raising interest rates, right? And so we have this almost a multiple bottom. Now, we would be wrong if price breaks below 39.77. I don't think the Bank of Japan will allow that to happen. I think with this slowing down of momentum on the monthly chart, we could see a return back to highs. And we can also see maybe failure swing, a higher low. Here we have a low at the 39.79 or so, and then we have a higher low at 42.38. And if price, if we stay above that area, we could see a move that continues much higher, right? So bulls versus bears, I'm gonna drop down to a daily chart, and we can also see that we do have a nascent baby uptrend that is forming. As long as we can stay above 39.79, we would still be bullish dollar yen. So dollar yen, bulls versus bears, we are bullish. Okay. All right. So I think we covered the major currency pairs. Let's go ahead and check out gold. I do like Kiwi dollar, but it's like a sister of Aussie dollar. So in the to conserve time, we're just going to jump over to gold. And here's gold. This is the golden child, right? Literally the golden child. And you look, it's the highest it's ever been ever in the human history, right? It's never, ever, ever been at the high we had at 3,503.95, 3,500, guys. I wrote a book called The Gold Rush Blueprint, where gold was trading in the 1900s, and I gave you guys the price projection of 3,500, and looky, little brown cookie, that's exactly where we are. And look, a little bit of pullback. We're at 3,289.70. A little indecision, a little doji here. And remember, we price gold in dollars. So this is a XAU USD is the trading symbol. So this pattern basically reflects the notion that I'm selling my dollars to buy gold, right? This is an exchange, foreign exchange. I'm exchanging dollars for gold. But here it looks like I'm not really sure about this trade anymore, right? We have a indecision spinning top, or doji. A doji means we have a narrow high, low, the high and lower high, but the open and close are narrow. So we have a narrow range, indecision. It's a tie. Bulls and bears are at a tie. They're at a standstill. It's like when you're doing a tug of war and they've got that little piece of cloth tied between the two. And so that kind of tells you who's in control. So that's a little piece of cloth right there that's tied. In the bulls and bears, it's a tie, right? So if we break above the high of 34.31, we can see a continuation of this trend. And since there's no previous price action, we really don't have anything to refer to, right? However, we can go to $5,000. If we break the low of the doji at 31.13.15, which is the low of the doji of this doji range, we can use the range break doji method, which I'm a big fan of. And that's our range. I call it the decision at the cross, right? If we accept Jesus Christ as our Lord and Savior at the cross, well, guess what? We go to heaven, right? We go to heaven. And if we don't, well, you know what happens. HE double hockey sticks, right? So that's our decision to be made at the cross. And with the dollar, we're changing dollars for gold. If the dollar is strengthening, and people are more fearful, I know sometimes we use gold as a flight to safety, but we could see the dollar actually get stronger, gold pull back a bit. It is overextended. It hasn't really had a significant pause, in a while, in almost a year. So we could see some type of a pullback to some type of Fibonacci support, right? Maybe, typical 38% retracement would be healthy. The trend would still be up, maybe we might not, that's a kind of a steep correction. Usually the corrections have been pretty shallow. So maybe we get back down to, maybe we split the difference and, get back into the 2800s, right? Before making the next leg higher, right? But bulls versus bears, I am cautiously bearish on gold. Very cautiously bearish. I really wouldn't wait till I would look for some type of structure, type of break below the low, break below 31.26. I needed to drop $200 before I even think about going. But I'm not. No, it's an uptrend. but uh, I'm not convinced of it going much higher, but I'm not convinced it's going to go down at this point, right? I would find something else a little bit more clearer too. All right, I'm going to take a quick look at, let's look at maybe NQ for those people who are trading futures. I got guys who are killing the Apex challenges. They are doing such a fantastic job of Jamie cut the rope. We've got Kenneth Rags, we've got we have Jermaine, we have guys who have now multiple Apex accounts and they're running their system, and it's really awesome to see our pip and runners who transition from Forex into futures crushing the market. And a big long distance high five to Jamie Cut the Rope, who was my student, and now he's one of the premier teachers here at Elite Traders University. And so if you join school, you'll be able to encounter him and ask him some questions and things like that. So make sure you go to check out our page on school. Okay. Here's NQ. That's what they like trading. We can see that we've been in an uptrend, and then the Trump, the tariffs took it down. Tariffs for the new sheriff drops the NQ down to a low of 16,427. But we have rallied almost to the old high. However, this is like a 78% retracement level, resistance level. So, I mean, we're in the Fibonacci's of last resort. I call them the smooth jazz levels, the 88.6 FM on your radio dial. All those cool radio stations on the far left side of the dial, KWVE, K-Wave, 88.6. And then the 88, your college radio station, 78.6 on your radio dial. So we're at the end of the radio dial, and we're moving sideways. Maybe we get a double top, but seasonally, this looks kind of bearish, kind of a pop and drop, where we could actually see a retest of the 16,524 area if we can hold this the high of 22,365. This is a great place to hedge, lock in. You want to keep your portfolio. Not that this is not trade recommendation. This is trade strategy sharing, but being able to, if you have a portfolio, get some puts on NQ. Get some puts equal to your position size in other stocks. That way, when this drops, you're making money on your put, right? You can cash out, and you got some cash, and you still get to hold on to your investment. Again, talk to your trading or your market professional, your finance professional, to see if options are a proper way for you to protect your portfolio, right? So you have puts of the S&P or puts on the NASDAQ. You get your puts going on here. And if it drops, you don't care because you're hedged, right? So that's like, we call that insurance, right? So you can even ask your financial professional about insurance in your portfolio. How much is insurance? And it should be pretty cheap because the VIX indicator, which is indication of a fear in the market, the VIX is like 19, 18 or 19. And so with that, the VIX is at 18.57. Usually when we're fearful and the market is scared, super scared, well, then we would see the VIX at like 30 or 40. We had like VIX at 42. Right now, VIX at 18.57 means that protection, if you bought puts or protection, they would be relatively cheap. I think this will be the best time to do that before people actually realize. I realize that I read fast. I do everything kind of fast, and that it kind of irritates people. And then sometimes what happens, I'm like a time traveler. I react to things, and I'll say, "Oh, this is going on," and then people go, "What?" And then all of a sudden, you'll see, and then boom, something. Oh, how did you know that was going to happen? It's like I was paying attention, So this, I see things in the market. Sometimes I'm ahead of the market, and then all of a sudden it happens later. So it can be a good thing, it can be a bad thing. But I think when people realize what's going to happen, then everything's going to sell off again. And we have a, Wealth doesn't only tell us, he told us back that about, back in 1934, that usually there's a three-wave correction against the trend, right? So if this is our one or A or one, B or two, C or three later, and if we stop here, then we can get our projection target, right? And I'm not saying it's gonna be the end of the world. It will feel like the end of the world if, but what do don't sell? That's the thing about it. So what happens is I had a buddy, he was going around, he was an insurance seller. He's like going around telling people, well, the market is down. You should get out of stocks and buy insurance. I'm like, are you kidding? This thing is is an A wave and a pullback in an overall uptrend. You tell people, you get people out of their high flying Nvidia stock at 90, they sell at 90, the thing goes back to 130. You're gonna have a bunch of enemies. Don't do it, right? So no, Greg, I was watching fake news on MSNBC and CNN, and they were recommending that we should get out of the stock market, and I'm going to provide a solution for them. I go, yeah, all right, go for it, bro. Not with my money. And then the next day, boom. Oh, what happened to that insurance thing, right? Now, he might be right again because we get a C drop. Our 100% expansion takes us to 10,482. But I don't think we get that low. I think we retest the low. I think we retest that. That is a bottom that has not been tested. I think we get a retest, and the people are going to they're going to be angry. But this is probably timed out to maybe October, November, right? And then people are going to be super angry. The panicans are going to come out, and this thing is going to go nuclear. This is going to be your generational buy, guys. I mean, this is going to be so, if you miss this, I think you get another chance at it. And I think you could change your family, change your trajectory of your entire your generations to come from this move that's coming up in the next several months this year. And you're going to look back and you're going to say, oh, Greg, yeah, I remember when you said that, man. And what did you do about it? I didn't do anything about it, right? And then we start seeing like 30,000 on the NASDAQ. You're like, I remember it was like 16,000. It's like, yeah, I remember when Apple Computer was $39 a share, right? You remember that? Remember when Amazon was like $70 a share? Remember that? It's like, anyway, you don't want to live in regret. But anyway, that's my story, and that's it for me. I think I've gone a little long, guys. If you liked what you heard, you like what you hear, let's hear more about it. Join our school group. Go to school. I'm going to put that back up for you so you can, if you want to use your phone. We have an app, school app, and you can get access to the Elite Traders University room via the app. And so I'll put that back up and share the screen. And again, we're just getting started. You can be a founding member if you're there. Let me go ahead and share the screen. All right, there we go. All right. So again, leverage the power of the elite trading community. Time to go to school, gain early access to the most proven Forex scalping system ever released to the public, along with exclusive bonuses reserved only for founding members of Elite Traders University School Group. You can go ahead and use your phone to scan the QR code that's on your screen, or you can use this really complicated Bitly. I thought it might be kind of simple, but now looking at it, like, nah, that was a bad idea. bit.ly Forex_scalping_club-4U, the number 4 and U. All right, guys. Well, I want to thank you so much for being with me. And remember that, I love you. God bless you. And keep your friends close and your stops closer.